The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we wrapped up trade on Thursday heading into the Easter holiday weekend, we saw some pressure in the soy complex that spilled into corn, spilled into Chicago wheat a little bit. Really robust day in cattle, though, on Thursday. We have some things to take a look at as we kind of wrap up and put a bow on the week of trade. Joining us is our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you as we talk about these markets ahead of the Easter holiday weekend. And a little disappointing maybe heading to the weekend, but it felt like traders had just kind of a cautious tone heading into a 3-day weekend, Bryan.
Yeah, I think that's a good way to sort of wrap it up. Cautious tone, or if you're bullish, just disappointing. um, yeah, I think in particular the bulls and the beans are kind of scratching their head, going, "Geez, what does it take? We got a quarterly stocks number that was friendly. We got a lower acreage number, and yet here we are, having a pretty tough end of the week with some pretty poor closes, actually, the last 3 sessions in a row. But beans has had a big recovery. And what's going on in that marketplace is you've got, again, another attempt by Argentina to loosen up some beans out of farmers' hands. And I don't know how many beans they have, because their drought conditions are pretty severe and crop ratings poor. And then Brazil into harvest, pushing beans in the world market. Farmers there's just not enough storage, so they have to go into the marketplace, and so they're undercutting U.S. prices. And export sales sort of echoed that again today. Soybeans, 5.7 million bushels, not a very robust number. And some question now, well, can they meet the USDA projection? Yeah, the answer is probably, but you don't like to see too many weeks like this. So corn was off, beans off, wheat off. Wheat is wheat. Get a little strength, look good, fall over. World's just not going to, I think, chase the wheat market until it really confirms there's a shortfall of inventory on upcoming crops, or this corridor closes down.
Well, and I wonder too, with the soybean market, you mentioned Brazil selling off the combine. I know that's a factor, a big factor. I wonder too, maybe some geopolitical risk with China and just, traders not wanting to, buy into certain positions ahead of the 3-day weekend. They want to wait and see how things go over the weekend, not only with the geopolitics, but weather and the forecasts ahead, et cetera, et cetera. That's kind of what it felt like as well, Bryan.
You brought up a point there with this sort of geopolitical tension, and if you read the headlines, you continue to see things like it's more stress than ever, which may be, with the president of Taiwan visiting the Speaker of the House this week, and China issuing some pretty stern wording around that. It's just not a warm and fuzzy feel. Does it affect agriculture commodities? I don't know, maybe. It's certainly not a check in the plus column, though. So that's a concern. Early in the week, you looked at some forecasts that really had this nasty snow and weather, suggesting a struggle for, in particular, maybe the Dakotas, and that's still out there. But right after those forecasts, you get a kind of a window there where it's going to be warmer, drier, and it's that time of year. The days get longer, the days get warmer. Planters are already starting to roll in areas where they can, so it won't be this massive rush to planting, but it's a little bit early to assign anything less than trend line yield to the crop as a whole. And I know there could be some prevent plan. I don't mean to be disrespectful to the guys in the Dakotas and elsewhere. You got such a snowpack, but it's April 6th, and we'll see. If we're 2 weeks down the road, which maybe 2 weeks down the road we're talking more rain, then that's a likelihood of a later crop. And then we found out some years that later crops, it doesn't matter as much. It's what you get, down the road from there, 60 to 90 days as far as weather. In other years like 2019, it really meant a lot when you measure test weight and lower yield.
Well, and I made a comment to someone. I was talking to him this morning, and I said, kind of, if you draw your line, say basically from Interstate 90 and west, you go north of that, and then west of I-35, kind of you go that direction, which is the Dakotas and western northwestern Minnesota. That's the area that of concern, focus. We'll see how much melts. We'll see what the flooding looks like, etc. But everywhere else around that, as long as we can get the windows, it kind of feels like it's going to be a normal type of planting year. I think of Iowa, Illinois, et cetera. To your point, it seems like things are shaping up to get us into the field in a normal manner, barring something unforeseen in the forecast, Bryan.
Yeah, right on. You couldn't have said it better. So it's that time of year. The tensions get a little heightened. Stress gets heightened for producers. It's natural. It's normal. The media looks for stories, and not that's right or wrong, but we're in a day and age where anybody snaps a picture of something and it can be worldwide in a short period of time. So if you have some flooding or issues like that, those things can kind of hit the news, and it's dramatic because of where it is. But is it widespread? Does it have effect on the macro picture? We're just a little early to argue that. The commodities are still sort of caught in a funk. You had this big jump in crude oil prices from last Sunday night, the surprise OPEC meet, and then dropping production. Oil shot up, gapped higher in the charts, left a gap, but didn't hardly move after that the rest of the week. Mm-hmm. But the underlying, sense is that the energy complex doesn't appear like it's poised to go lower anytime soon. So now you've got this idea of heightened costs for fuel right into the planting season. So a lot of stress is out there right now when the weather isn't going well. But what spring doesn't have its challenges. Hopefully they just don't extend too long for most farmers.
Well, to your point about the OPEC move, and I'm glad you brought that up. Just thinking about the stresses that are here, and now that we've had a few days to digest the USDA numbers from last week, and we're looking ahead. We got an April WASDE report in front of us as well, and whatnot. As you just kind of step back, 1,000-foot view, anything you would say to farmers and ranchers as they're trying to manage some of that maybe marketing stress that's in front of them on top of everything else with planting season?
Yeah, so right on top of everything else. So attention focuses on getting the job done at hand. And if the markets aren't rallying or they're sideways, maybe a little lower, there's a tendency to sort of ignore it. Let's not do that. Let's recognize that corn prices are still, from a big picture perspective, on a slippery slope. No matter how you slice the stocks and acreage report, whether you agree or disagree, we got a net increase of corn bushels. So we take some out of stocks, but we add that extra 1.2 million acres. Let's assume these numbers are accurate today, and that's what the trade has to work with. You can see where prices went defensive on that and finished the week not terrible, 556 and 3/4 on December corn, but it wasn't. Just a few days ago we were challenging 575 and hit 575. So you're almost 20 cents off of that level, and that's a slippery slope. We've had a series since October of lower highs and lower lows. So we put a new low in on this downtrend back on the 22nd of March. Then we've rallied up, and now we're sliding. So if the trend continues, that means we take out a new low. That's what I mean by a slippery slope. We just cannot sustain rallies. We, as in the market, is unable to sustain rallies at this time. And it's just, like I said, if you're looking for bullish factors and saying, well, we're going to have, so many acres of prevent, I think that's a little early to make that judgment, even though if you're in North Dakota, it probably makes a lot of sense right now that you might be leaning that direction.
We are having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing, as we look at the markets and wrap up things heading into the Easter holiday weekend. Bryan, let's talk livestock. Really robust day in cattle, live and feeder cattle trade. Hog market, a marketing year high on the weekly export sales for pork. Yet that hog market kind of just still doing what it's been doing, kind of a mixed bag there. What's your take on just the overall tone in the livestock sector to wrap up the week?
Well, the tone in cattle is really friendly. So again, not that's didn't hit everywhere, but you had a winter storm system again this week that you know it conjures up ideas of calf losses and weight gain issues, those type of things. Talking to a couple cattle guy this week, they're kind of tired and wore out. They're trying to calve, and they've got snow and wind. It's challenging. Um, the demand market is still very active. We've been kind of wondering when the shoe drops, and we saw cattle futures correct back and they'll roar back, new highs. It's just a robust market right now, and it's cash led. There are some strong cash bids above 170 this week, maybe 174, maybe higher, localized. That's pretty impressive, but more impressive maybe is the way the board closed today, sharply above 170, 171. Um, '07, a gap higher on the charts today. Um, an impressive move. So I'm looking for gap theory that say, well, we're exhausting the markets because there's three gaps. Can't find any gaps to go back and get a breakaway to measuring. So this is just an impressive run. Got the grilling season around the corner and the feeder market on fire. And then the exact opposite in the hog market. We just can't get out of bottom barrel new contract or close to new contract lows for the calendar year, at least established here. I gotta wonder when, at some point the consumer's going to say enough. I'm going to buy pork.
Mm-hmm.
But the board got ahead of the cash index. It never really got caught on fire. We thought we'd maybe see some, buying in the futures market when we talked about African swine fever in China. Those things haven't, really propelled the market upward. And even today, we had a real nice bullish key reversal going, and then it ran out of steam. So, pretty challenging to be overly optimistic when we just don't have that follow through buying. But I think it's a matter of time. The hog industry, these aren't horrible prices, but they're probably not good enough where corn is priced to conjure up further expansion.
Well, and one thing I want to make note of as well, I don't want this to go by the wayside, but part of on your cattle discussion here, you look at feedlot country and making dress deals, breaking all time highs for weekly weighted averages. I know live deals got a little ways to go, but to your point, this cattle market tone friendly. I mean, you're seeing it everywhere: the futures trade, the cash market, etc. Really friendly tone despite those challenges that you mentioned that we're seeing out there in the countryside right now.
Yeah, and along with that, so you're clicking in all cylinders, but you're also seeing in the technical trade when the market just kind of hit that wall and fell off. You kind of scratch your head and go, "Wow, wait, was that the high?" And then it just comes roaring back. So now the question is, when you look at for the producer, when you look at something like the June contract, 163. Wow, new contract highs. It's still well below April, though, in the cash market. So do you hedge this? How do you defend this in case it's, we just run out of gas? And the cattle market does have a history of, let's say, peaking in this time window.
Mhm.
So I'd probably, argue that we look at puts or some kind of put strategy in that market and try and leave the top side open. This is kind of history making here, and the question is whether demand can follow through. And you and I have talked about this repeatedly: is at what point does the consumer back away, or is the consumer going to say, well, I know we're getting away from the term, but we're post COVID, we're going to eat, we're going to go out, we're going to, okay, spend more on
Mhm.
steak, but everything costs more, so what? Let's just buy and enjoy ourselves, and maybe we won't, take a big vacation. I don't know, but it seems like they're geared up for the grilling season and ready to roll and willing to pay.
Definitely. Brian, how about that dairy market trade as we head to the weekend? Any thoughts there?
Yeah, sour. No pun intended. We got that little bit of a push on the front months or surge when the river of rain hit California and displacement and worries about cheese production and milking or dumping milk or quality of milk. And that kind of got behind the market, and it's just dismissed that. Unfortunately, it just continues to look weak. The May contract, under $18 right now, going back to the lows or back toward the lows. But then when we get, even beyond that, you look to June, 1820 new contract lows hit today. Now the only good news is it bounced, so far well off the low. The low is 1794, but you've got just red across the board. You've got a supply issue there that the market can't catch up to just yet. Exports are good, but in this environment, not good enough, and everything's relative. So I'm arguing that prices aren't very good, and that's because we've come from much higher prices. If you're from $15 and you're at these levels, you'd be pretty happy. So the point I want to make, though, is that producers still have just a little bit under $20 in the deferred months to work with. That's a pretty solid board price when you look at an industry that continues to expand its production.
Well, great thoughts as always, Bryan. Before we wrap it up today, anything else you want to mention or reiterate for our listeners?
Well, I think the obvious, the older you get, the more you try and avoid pain and appreciate things. So the big picture perspective is that as we look at the busy season ahead, stay safe. So that'd be the first message. Second is happy Easter. Third is stay vigilant on the markets. Don't take your eye off the ball for too long. I know you're going to have priorities focused elsewhere, but that's the way it looks. So we'll just keep moving forward.
Well, Bryan, if folks want to reach out, get some questions answered, want to work with you and the team there at Total Farm Marketing, what's the best way?
The best way is a phone call, 800-334-9779. So just give us a call. We'll happily sit down and talk to you. Otherwise, shoot me an email at your convenience, Bryan with a Y, at totalfarmmarketing.com. So that's pretty simple. Or check out our website, totalfarmmarketing.com.
Bryan, have a happy Easter weekend, sir. Thank you so much for joining us, and we'll talk to you again next week.
Absolutely. My pleasure. Thank you, and have a safe and happy holiday yourself.
Thank you very much. Bryan Doherty with Total Farm Marketing. It's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.